Hey, what's up, my friend? So in today's video, we will be discussing about the RSI indicator, otherwise known as Relative Strength Index. So in today's training, right, you will learn, right, the truth about the RSI indicator and why it's not just about, overbought or oversold. Okay, you'll learn how to increase the probability of your winning trade using this one simple technique that, I've never seen anyone talk about. You also learn, right, which is the best market to use the RSI indicator, because here's the thing, not all markets are created equal, and there are certain markets out there that is very suited to apply the RSI indicator of it because of the characteristic of the market, and I'll share with you, right, which market it is, how to time your entries with precision, and also we'll talk about how to time your exits before the market reverse against you. All this using the RSI indicator. Excited, right? And here's what I want you to do right now, right? Hit the thumbs up button and subscribe to my YouTube channel. This is for the YouTube algorithm, okay? Do it right now and let's get started. So first thing first, right? The truth about RSI indicator. RSI again stands for Relative Strength Index, and it's an indicator, a momentum oscillator developed by J. Wilder. Okay, so this is a momentum indicator, right? And let me prove it to you. This is the breakdown of the RSI formula. Right, don't be alarmed by it, right? I know you're thinking, oh man, Reina, I suck at math, right? Why did you show this to me, right? Don't worry, right? This is very simple to understand. Even a 10-year-old can do it. So let me walk you through step by step, right? And explain to you, right, why the RSI indicator is a momentum indicator. And then we'll look at how you can use this indicator for your own trading. Okay, so first thing first, again, you can see the formula over here. RSI is equals to 100 minus 100 divided by 1 plus RS. And as you know, right, as you can see over here, RS is equal to average gain divided by average loss. So now the question is, what is average gain? So let me give you a very simple example. Let's say we use a 10 period RSI, right? To make things simple, let's say a 10 period RSI, 10 period, okay? So what you're doing is essentially calculating the average gain over the last 10 period, or over the last 10 days if you're trading on the daily charts. So let's say, a stock, it moves $100 over the last 10 days. So the average gain of a stock, right, moving $100 over the last 10 days is $10, right? Just 100 divided by 10, right? Because we are using a 10 period RSI. And average loss is just the same thing. You just calculate what is the total loss over a given period and divide by the number of period, and that's your average loss. So the key thing, right, to take note is that the higher your average gain, right? Let me just share with you. The higher your average gain, the higher your RSI is going to be. Make sense? So let me just give you an example. Let's say your average gain is, let's put it as $10. And your average loss, right, it's $1. Right? Let's use a simple 10 period RSI. So just put in the numbers, right? You'll get, 1 plus, right? Your RS will be 10, right? Because 10 divided by 1, it's 10, right? So it's equals to 100 divided by 11. So 100 divided by 11, it gives you a figure of about 9.09. Okay, so this whole portion here is about 9.09. You take 100 minus 9.09, right? You get a RSI of about 91, right? So this is it's showing you strong momentum because your average gain is much higher than your average loss, and that's why your RSI is at 91. Okay, so can you see how this works? So another example, let's say this time around your average gain is still $10, but your average loss has increased even more. Let's say your average loss is now $20. Okay, so again, let's plug in the numbers. So 10 divided by 20 is what? 0.5. So what you'll do is you take 100 divided by 1 plus 0.5, which is 100 divided by 1.5. So having a calculator here, it tells me that this portion over here, the value is 66.66 or 67, whatever the case is. Okay, and you take 100 minus 66.66, 100 minus 66.66, you get a value of 33.34. This tells you that the RSI value, okay, is 33.34. And the reason for this is because the average loss is now greater than the average gain. Right? There is more bearish momentum in the markets. That's why your RSI value has fallen. So can you see how this RSI formula works? It's nothing, scary. It's actually relatively simple. And let me just break it down for you even simpler, right? RSI goes up, right, when your average gains is greater than your average loss. And this pretty much means that the size of your bullish candles are larger than the bearish ones. And likewise, RSI goes down when your average gains are smaller than your average loss, right? Size of bearish candles are larger than bullish ones. And in other words, RSI indicator, what it does is it measures momentum in the market. Okay, and one thing to share over here is that the calculation, right, of this over here, the average gain and average loss, I use a very simplified version, right? I think for the RSI indicator, they use an exponential calculation. It's a little bit more complicated, but again, the concept is the same. Okay, it's just that the way they calculate it is more complicated, right? So just a disclaimer over here. So now that you know how RSI works, right, why it goes up and why it goes down, so how can you use it in your trading, right? Let's move on and find out. You can use the RSI indicator to actually improve your winning rate, right? And by trading with the trend, right? I mean, no surprise here. When you trade with the trend, okay, you get a larger profit potential because, you know, the so-called trending move of the market, the stronger leg of the market, right, usually moves more compared to the pullback. So when you trade with the trend, your profit potential increases. And on top of it, when you trade with the trend, the market tend to persist, right, in that same direction when it's trending. So when you're on the right side of the trend, your win rate naturally, you know, goes up as well. But now the question is, how do you define the trend, right? That's the question. And there are many ways to do it, right? Some traders, you know, talk about higher highs and higher lows, lower highs and lower lows, and that is a little bit subjective, right? So what I'm going to share with you is a very objective way to define the trend using RSI indicator, and it's something that I've never seen anyone talk about before. And if you recall, RSI is all about, you know, measuring your average gains to average loss. So if you think about this, if the average gains is greater than average loss, right, the market is essentially in an uptrend. And if your average gains is smaller than your average loss, then the market is in a downtrend. Okay, so here's a something to share with you. I will be using a 250 period RSI. Reason being is that again, in a year you have about 250 trading days, so I went with 250. You want to use 200, it's fine, it's up to you. And above 50, right, what the RSI indicator tells you is that the average gains is larger than the average loss, and we can conclude that it's in an uptrend, and we want to look for buying opportunities. And likewise, if the RSI is below 50, it's telling you that the average loss is greater than the average gain, and we can conclude that it's in a downtrend, and we want to look for selling opportunities. So let me give you an example. Okay, so if you look at this this chart over here, okay, I'm just going to adjust my RSI indicator. Let me just adjust this, and 250 period, I click OK. So you can see over here, right, I have drawn this blue line over here and put it at the 50 mark, right? Let me just highlight out this blue line. You can see over here, put it at 50. So every time the market is above this blue line, we can say that it's in a long-term uptrend. And every time the market is below this blue line, we can conclude that it's in a long-term downtrend. So if you look at it, right, this market, okay, this portion, right, when the market went above this blue line, right, the market pretty much went in a very nice uptrend, right, because the average gains are greater than the average loss. And likewise, if you just zoom back out a little bit, okay, you can see that over here, the market, right, when it traded below this, when the orange line went below the blue line, it's telling you that the average loss is greater than the average gains, and that's where, you know, you pretty much went into this downtrend over here. Okay, and after which you have some, you know, whipsaw price action over here, which pretty much coincide with this portion before the market it breaks out of it, and then you went back to this uptrend. So what you can do is that you can use the RSI indicator to help you, right, define the long-term trend using the technique that I just shared with you. It's very objective. You don't have to, you know, guess, you know, is it a higher high, is it a higher low, blah blah blah. Just use this, plot out the 50 mark on the RSI indicator. Anything above it, long-term uptrend. Anything below it, long-term downtrend. And then you can just, you know, trade in the direction of the trend. Simple. Okay, so that's the first trading technique that I want to share with you. Next, the best market for the RSI indicator. So I've done quite a bit of research on this, and I found out that the stock markets, right, really, right, works really well for the RSI indicator. And there are two reasons for it. Number one, the stock market is in a long-term uptrend. I mean, if you can look at any stock market, it's the S&P, the Nasdaq, Russell, or whichever country you're from, right, you can see that since inception, right, there's a very high chance that the market is probably higher than it is since inception. And the reason for this is because economies grow, GDP, you know, increases, a country does well, okay? The stock market is a barometer, it's a reflection of it. That's why it's, you know, in an uptrend, okay? And one thing about the stock markets is that the pullbacks, right? If you look at pullbacks in the stock markets, it's usually short-lived. Yes, the pullbacks, right? It can be pretty strong at times, right? The sell-off can be really quick, right? But one thing you realize is that the pullbacks in the stock markets, they are short-lived, right? It's only a matter of time, right, before the pullback ends, and then the trend resume itself. So since we know that pullbacks, right, are usually short-lived in the stock markets, we can actually use the RSI indicator to time, right, the so-called extreme pessimism of the pullback. And that's usually, right, pretty much a good time, right, to be looking for buying opportunities, because you know the stock markets in the long run, they are in a long-term uptrend. So the RSI indicator is very useful to help you time your entries on these pullbacks, looking to buy, right, at this extreme pessimism where, you know, traders, investors, they are panicking the markets, they're selling their holdings. That's where you want to come in, right, to buy, right, to be a contrarian. Okay, so how do you do it, right? This is fun stuff, right? Let me share this with you. So what you want to do is use a 10-period RSI. The reason I go with 10 period is about 2 weeks of a data price action. You want to use 14 period, 15 period, it's up to you. It's not going to make much of a difference, but I use 10 period, right, to take into account 2 weeks of data. And you want to look to buy when RSI is below 30. I'm not saying buy when RSI is below 30. Look to buy when RSI is below 30. Because again, remember, right, when RSI, the number goes down, right, the lower it goes, right, it's telling you that there is a stronger bearish momentum in the markets. The average losses are much larger than the average gains. That's why your RSI number, right, keeps going down. So when RSI is below 30, it's telling you that there is a strong bearish momentum in the market. Okay, and as you know, pullbacks, right, they are usually short-lived. It doesn't, go down forever. Yes, there are times the market goes in a recession, stock market is in a downtrend, but it doesn't happen often, right? Maybe once every 7 years, once every 10 years. So pullbacks, they are usually short-lived before the trend resume itself. And just because, right, the price is below, the RSI is below 30, doesn't mean you want to buy, because you sort of want to wait for a confirmation that the buyers are stepping in, right, before you enter the trade. You don't want to, jump the gun too early and having to, swallow the pullback, right, as the market goes against you. So what you want to do is you can consider, right, to enter your trade, right, after the price has break the previous day high, maybe using a buy stop order, or you can wait for a bullish reversal candlestick pattern, right, before you enter a trade. So let me share with you, right, a few examples, right? So what I'm going to look at is, needless to say, the stock market. Let's have a look at the S&P 500. Okay, so again, right, I'm going to change this to 10-period RSI. Okay, so this is on TradingView. You can just go to indicators, look for RSI here, and you can just insert it into the charts. Okay, so what I'm going to do is I'm just going to zoom out a little bit and highlight to you, right, times, right, when the RSI dips below 30. So I've also drawn out the blue line. You can see that over here, this is where RSI is below 30. So it doesn't happen often, right? But when it does, right, pay attention to what happens. So over here, RSI is below 30. Over here, let's take this as nothing, right? Let's over here, here, and here. And look at, what happened usually when the RSI goes below 30 in the stock markets, right? We have this bounce over here. We have this slight bounce over here, this strong bounce over here. Then at this point, I think it pretty much coincides with this portion here. This one, we pretty much had this strong bounce here. Over here is this portion here. Then over here, no, there's nothing. This one here. Okay, so this one over here, you can see that now, depending on your trade management, right, you might have to swallow even a bigger pullback as the market continue to stage even a deeper pullback or correction, right? But eventually, over here, right, this was the one where, it did a strong rally. Over here, we had this, I think, probably somewhere here. This one is possibly this one here. Then over here, led to this bounce over here. And recently, over here. Okay? So, as I mentioned, as you can see, right, whenever the RSI is below 30, it's a sign to you that the market, right, is staging a steep pullback. And really, right, the last thing that you want to do is to go short, right? Because the market is in a long-term uptrend, right? Shorting when the RSI is below 30 is usually a bad idea. Okay, so what you want to do instead is to look for buying opportunities. But as I've mentioned earlier, you don't want to just blindly buy when the RSI is below 30, because you can see that over here, this portion, right, there are times where, you would have to really, for example, if the market is here, RSI below 30, right, over here, depending how you manage the trade, you might have to swallow this huge, right, reversal against you. So of course, you have your stops in place, yada yada. So what usually I recommend is to let the market, right, tilt its head. Let it show you, right, that it's about to rally higher before you enter the trade. And one technique that I can share with you is to use a buy stop order above the previous day high to get on board the trade. So you can see over here, let me explain, right? Over here, okay, so let's say this portion here, right? At here, this portion, the RSI here is already pretty much below 30. Okay, so what you want to do is to use a buy stop order and enter only at the previous day high. So at this point, right, you might have a losing trade on this candle, this one over here. Okay, RSI may, this one over here, the RSI may or may not be below 30. I have not, really checked it, right? So you might have a losing trade when the price spike up higher and then it continues lower. But you can see that, the next opportunity came in over here on this candle, okay, where the market, right, pretty much breaks above this previous day high. All right, your stops, okay, can go below this swing low, and you would have, caught this huge reversal up higher. Okay, so that's what I mean, right, by having a buy stop order above the previous day high. So let's look at a few more examples over here as well. This might have been a losing trade, this one over here, a buy stop order above this one over here. Okay, market rallied a little bit before it reversed lower. Over here again, right, you can see that at this point RSI is below 30. Okay, so what you can do is again buy stop order above this highs again, and you would have caught this up rally up move higher. Okay, similarly over here, okay, at this point RSI is below 30, buy stop order above the previous day high, and you would have I would say possibly made money on that trade as well. And over here again, right, RSI this point below 30, buy stop order above the previous day high. Okay, so it's over here, right, would have gotten long and would be positive for you as well. So again, do the back test, right? Don't take my word for it. Back test, validate the concepts I just shared with you, right, and see whether it works for you or not, right? But the key idea here is in the stock markets, right, the RSI indicator, it works well for it based on my own research. Okay, so again, right, look for buying opportunities when RSI is below 30, right? You can either, wait for the price to break above the previous day high using a buy stop order, or wait for a bullish reversal candlestick pattern before you time your entry. So, one thing to note is that you don't want to do this, right, across every market, because not all markets behave the same. As I've mentioned, right, the stock market is a different beast, right? It's in a long-term uptrend, and the pullbacks, right, it tends to be shallow. I mean, it tends to be short-lived, right, before the trend resumes. And you can see that if you apply this to, let's say, other type of markets, like maybe how about a pound yen, okay? Like, you just buy just because RSI is below 30. You can see that you're gonna suffer quite a bit, right? You can see that over here, the pound yen, it can remain, right, oversold for a long period of time, right? It can remain oversold for pretty much a long period of time. So don't just blindly buy when RSI is below 30, or don't just blindly sell when RSI is above 70. Okay, RSI is a momentum indicator. And the reason, right, why I talk about the stock markets, right, is because stock markets, it's a different beast, right? Pullbacks tend to be short-lived before the trend resumes itself. And the RSI is great, right, to identify this maximum pessimism, right, to help you time your entries. Okay, so this is how you do it. And moving on, right, finally, how do you actually better time your exits, right? So understand, right, many traders, they enter a trade, market goes in their favor, and the next thing the market reverses and pump, hit their stop loss. Why is that? Okay, so what you can do is that you can look to capture a swing in the markets, meaning the market make one swing, you exit the trade. You don't try to ride the trend. So that's called swing trading. And the RSI indicator, again, it can help you with it, right? So for example, let's say you are long. You can exit when the RSI crosses above 60, right? This means that, the average gains are larger than the average loss. The market has made a swing, right? So you exit the trade after one bullish swing. Alternatively, right, you can look to exit, right, when the RSI crosses below 40, right? This is for short trading setups, right? So you exit your trade when the market makes just one down move. So an example, okay, let's see, right, pound yen, okay, this one over here, okay, you can see that over here, let's say, for example, over here, you went short maybe at this price rejection. Okay, so what you can do is, again, right, let's say you're short, you exit your trade only when the RSI crosses below 40 over here. So you can see that over here, eventually the market did head down and cross below 40 at this point. You can see over here at this point, RSI is now below 40. I think you can't see this. Okay, so this is where you exit the trade when RSI crosses below 40. So thereby you're just capturing this one swing over here. Okay, alternatively, another example, you have this crude oil. Okay, let's say you again, let's say you went long, right? Maybe some bullish price action or whatever, right? You went long over here at support. Again, right? You can exit your trade when RSI crosses above 60. And you can see that over here, okay, now RSI, it has crossed above 60 over here, right? Thereby you're capturing this one swing in the market. So this is how you can also use RSI to help you just capture a swing in the market, right? So otherwise known as swing trading. Okay, so with that said, right, let's do a quick recap to what we have talked about today. Number one, RSI, it measures momentum in the markets. Number two, you can use it to trade with the trend, right? Using the above 50 looking for buying opportunities and below 50 for selling opportunities. Number three, RSI works well in the stock markets to help you time your entries on a pullback. And finally, RSI can help you capture a swing in the markets. Okay, so with that said, I have come towards the end of today's video. If you've enjoyed it, hit the thumbs up button, subscribe to my YouTube channel, and by the way, right, this RSI stuff that I just shared with you, it can be also used, right, to develop a systematic trading system using RSI only, right? Maybe that's a topic for another day. But if you're interested, just leave it in the comment below. Say, I want the RSI system, right? So if I see at least 200 comments, right, I will then consider doing a video on it. I'll do a video on it, right, and share with you this RSI trading system for the stock markets. With that said, I will talk to you soon.